Welcome, traders. In this video, you're going to learn one of the most straightforward day trading strategies specifically designed for beginners. You truly don't need any prior experience to find success with this method. It is exactly the kind of strategy I wish someone had shown me when I first started, as it takes professional level concepts and simplifies them so much that anyone can execute them effectively. Don't let the simplicity fool you. Being simple doesn't mean it isn't lucrative. I've personally conducted a backtest of this method, and it yielded an impressive 65% win rate, which is exceptional for a strategy this accessible. Let's dive right in. The core indicator, the 50 EMA. The beauty of this strategy is that we only focus on a single indicator, removing all the guesswork. That indicator is the 50 EMA, 50-day exponential moving average. This is a line on your chart that tracks the average price of an asset over the last 50 days, though it gives more weight to recent price action to remain responsive. To set this up, choose the chart you want to analyze and click on Indicators. Search for EMA, add it to your screen, and adjust the settings to a length of 50. We are specifically looking for a chart where the price has been trending below the 50 EMA. The strategy officially begins the moment price breaks above the 50 EMA and a candle manages to close above that line. Step 1. Identifying the breakout and pullback. Once the first step, the break above the EMA, is complete, we wait for a pullback. However, we don't just count any dip as a real pullback. For this strategy, a valid pullback requires at least two opposite candles, two consecutive red candles, moving downward after the initial break above the EMA. When you see those two back-to-back red candles, draw a horizontal line at the swing high point that was reached just before the pullback began. Now, we wait for the price to reverse and break back above that horizontal line. It is crucial that the body of the candle closes above the line. Once that happens, you have your signal to buy. Managing risk, stop loss, and take profit. Even with a perfect setup, success is never 100% guaranteed, which is why disciplined risk management is vital. To set our stop loss, we use a second tool called the chandelier stop. Select the one by PipCharlie on TradingView. You will place your stop loss exactly at the level indicated by the chandelier stop at the time of your entry. For your profit target, set the take profit at exactly double the distance of your stop loss, a 1-to-2 risk-to-reward ratio. The rules of invalidation. Knowing when not to trade is just as important as knowing when to enter. I have two primary rules that invalidate a setup. The deep pullback. If the price breaks back below the 50 EMA during the pullback phase before it can break your horizontal line, the trade is dead. A clean pullback must stay above the EMA. The monster candle. If the breakout candle is disproportionately large, 3 or 4 times the size of an average candle, the move is likely unsustainable. This often leads to an immediate reversal, so it's a trap we avoid. Trading the reverse, the sell strategy. This strategy is versatile and works perfectly for short selling when the market is trending downward. If the price has been trading above the 50 EMA, wait for it to break below the line. Once it dips below, look for a pullback consisting of 2 consecutive green candles. Draw your horizontal line at the recent swing low. When the price reverses and closes a candle body below that horizontal line, you have a sell opportunity. The risk management rules remain exactly the same, just mirrored. Real-world examples and proof. Let's look at the USD/CAD chart. The price was stuck below the 50 EMA for a long time before finally breaking out. We waited for the mandatory 2-candle pullback, drew the horizontal line at the high and entered once a candle closed above that line. Following the chandelier stop and our 1-to-2 profit target, the price hit the take profit region smoothly. We see the same success on the AUDJPY chart for a short position. Price broke below the EMA, pulled back with 3 green candles, broke the low, and hit our target. I also want to emphasize why following the rules is non-negotiable. In one example, the setup looked promising, but the pullback dipped back below the 50 EMA. Had we ignored that invalidation and bought the breakout anyway, the trade would have failed and hit our stop loss. Sticking to the plan is what separates profitable traders from everyone else. The backtesting results. To prove this works, I backtested every single setup on the AUDJPY 4-hour chart from 2020 to 2026. Out of 32 total trades, 21 were profitable, resulting in that 65% win rate. This is definitive proof that you don't need a complicated system to make money. You simply need a set of clear rules and the discipline to follow them every single time without exception. I truly believe this is the most effective and simple day trading strategy for beginners in 2026. Once you have mastered this and are seeing consistent profits, you can begin exploring more advanced concepts. But for now, stick to the plan, trade smart, and I'll see you in the next lesson.